Hello, ladies and gentlemen, and welcome back. Today, we have to discuss stocks, commodities, and cryptos because all of these markets are at critical points ahead of the biggest news event that we've seen in some time. That's right, inflation numbers are less than 24 hours away. So with Tesla finally reaching our $180 target that we've had for the last couple of weeks, with stock markets falling off as we expected so far, and with the dollar index finding some buyers, are we in for a collapse? Well, let's take a look at that together right now because there is so much going on under the hood of these markets. Well, welcome back everybody to the Daily Show where we discuss everything to do with the markets around the world. We'll start off with the news headlines, the macro data, then we'll lead into the lead indicators, and of course the key levels we need to be watching. The FTX Binance saga continues, but this time Binance has said, no, we don't want to do the deal. It looks like they've walked away from the bailout, and that, of course, sent Bitcoin and other cryptos realistically into another haywire sell-off. We've also had some big news in the last 24 hours about Tesla. Of course, filings revealing that Elon Musk has sold another $4 billion worth of shares. That did not bode well for the last 24 hours of price action for Tesla, and it moved down towards that 180. No wonder we were seeing that negative price action. When you've got the CEO selling some, it's not usually the best thing. You know, the other thing about Elon is he tends to sell, or has been selling, kind of near those high levels. So does this bode badly for the stock moving forward? We'll talk about that later. I just wanted to give a quick reminder that we're running a competition as well for all the members of course, the community. If you're subscribed to any one of our social media platforms, all you've got to do is put in your name, email address, and you go in the prize pool to win one of our main courses. Of course, there's a whole bunch of thousands of dollars of giveaways here, and we'll be doing a live stream, of course, for the Monday Open next week, where we'll do the draw live. So thanks so much for supporting the channel, and of course, this is just our way of giving back to members of the community. Feel free to do it. Link in the description down below if you're interested. So let's talk about euphoria versus, of course, greed and fear, realistically fear in this case. Are we in pessimistic modes? Yes, according to most models, we are. We're actually incredibly fearful, but it doesn't seem like it sometimes when you look at these markets. Recently, we've seen another extreme kind of panic mode type of alert, and we're starting to potentially come out of that. The main thing about these alerts, though, is they show us that we have, in traditional terms, a sideways market, which is more of a coin flip. And it kind of points towards 2 to maybe even 3 or 4 weeks of uncertainty. Of course, we've got everything going on with the elections in the US that obviously has an impact on it. We have the crypto saga, and we have valuation squeezes, plus the Fed's come out and said, hey, we expect higher rates for longer. Depending on what goes on with this inflation number, this will of course change, but statistically, we're usually in a bit of a coin flip to negative market, followed by positivity later on. We have to remember that there will be a turn point at some point in these markets. Where is it? We're going to hopefully find it together. We've got lead indicators that we can help us to find that. And we'll talk about some of those later to find the dips. We also know that smart money and dumb money have crossed over with each other. This is boded pretty bad in 2022 for the markets moving forward. We tend to see when this occurs, realistically, maybe a little bit of an uptick followed by sell-offs, a little bit of an uptick followed by sell-offs. These crosses, though, have been significant. And again, we've got a new one coming. Seasonality usually is bad for the start of November. Even during most years, you tend to get that dip followed by a potential rally. In bear market years, it's a dip followed by a sideways action. Now, of course, this is just taking all the statistics together, but it's also interesting for us to be able to check those out. Q3 earnings gets worse. I mean, we're under 60% now. 58% beats 1440, misses 1046. It's not really what we want to see when it comes to Q3 earnings. It's pretty bad, and it's consistent with a economy that is starting to struggle and, of course, starting to have some problems. So just before we jump into the charts and take a look at what's going on right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, many of you would know that I'm a huge follower of rotation. In fact, I'm a big believer of being able to see rotation in the markets. Now, Tiger Brokers offers an amazing platform. They're constantly improving, and I've got more on that a little bit later. But what I want to mention was that recently we have seen tale of two markets. Take a look at the last 10 days in the stock market. Automobiles, internet and direct marketing retail, movies and entertainment, they've been frankly terrible. Whereas at the same time, there are other sectors that have done okay. So it just tells you that sometimes you need to think outside the box. It's not just S&P 500. It's not just, of course, NASDAQ. Sometimes it's worthwhile thinking outside of the box and looking into the inner workings of these markets. On top of that, Tiger Brokers has just recently won the 2022 Outstanding Value for International Share Trading Award. It's a big deal, and it just really attests to, I guess, some of the things that they're doing. And because of this award, we decided to, of course, partner up with them, and I thought that it would be a great idea for us to offer new members to potentially wanting to try our private Discord community a free 1 month. So if you're interested in signing up with Tiger Brokers at the moment, especially from Australia and New Zealand, and you're interested in some of the bonuses here on the screen, including the 40 zip stocks and everything else, you can also now get, for a limited time up until the 20th of November, a free 1 month FX Evolution private community access. So if you're interested in those things, why not check out Tiger Brokers today? And of course, a big congratulations for them to win another award. Well, let's jump into the charts and talk about what's happening. First off, the VIX. The VIX jumped a little bit, up 2.15%. Now, most of you know the volatility index is a great gear of fear and greed. At the moment, the market is probably in the middle ground. It's not really fearful, nor is it really greedy. Now, we've seen this traditionally happen before. Back in 2008 is the big parallel where we had a lot of 35 style VIX levels, similar to 2022 so far, and then we saw a pullback followed by an extreme move. This is something that a lot of people are discussing. It's a nice correlation and, of course, something that can potentially explain what may happen in the future. And we'll talk about what levels could trigger that on the NASDAQ especially very soon. Let's have a look at yields. What's going on? Well, yields have dropped a little bit. We'll actually load up the 2-year just so we can see that. 4.6% down slightly on the session ahead of the core inflation number. Of course, if yields spike, stocks tend to go down. That's not really a good thing for it. We'll find out what happens. 10-year was also down to 4.096, and we're still sitting at 5% pretty much for most of 2023. So at the moment, the yield looks like this, up and then flat for a long time, really playing into that idea of potential stagflation. What about high yield bonds? That's been a good kind of, I guess you would say, lead indicator for the stocks in 2022 so far. It dropped off, no new lows on high yield bonds just yet in terms of down here, but certainly coming in line with the stock market. And as we know, high yields have sometimes forward predicted bad things coming. What about the dollar index? Has the dollar index shown us anything? Well, we mentioned that it was in demand, strong demand in the previous session. In fact, all of the things we really talked about worked pretty well in the previous session. The demand came in for, of course, the dollar. That led into some weakness in the stock market, and most of the other charts realistically turned the way that you would expect them to. But now we find ourselves ahead of inflation, and we're at a critical zone. In fact, we've still got this alert sitting just above that 110 at that high. This is a supply zone. So I'm going to modify this just so we can see where these wicks are. And we know that if we break this level, it could be incredibly significant towards further rallies for the dollar. Where is it? It finds itself at a critical point ahead of news. It's no wonder that the market seem like sometimes they're rigged when they move towards key levels, and depending on the news result, we should see some reactions. News tends to be usually like goes one way and then sometimes that's the wrong direction. It grabs liquidity. I wouldn't be surprised at all to see it spike, then potentially drop and then pull back, something similar to this. It's something that I'm looking for, and if it does happen, then of course maybe we'll know what to do. That being said, we don't actually know whether inflation is going up or whether it's going to remain incredibly sticky. And this is a huge number. Expect the volatility to be off the charts on some of these particular indicators. Let's have a look at the euro. Does that bode pretty similarly? Yes, we hit supply that's over here on the higher time frames. Then what's happened is we've found that supply several times. Look at the weeks, 1 week, 2 weeks, and a huge one through the session that rejected off. What I'm looking for now is a new low, and I'm actually going to set an alert just underneath here, because if that does happen through the session, I think it could bode again strong for the US dollar and potentially very weak for the euro. Maybe we move back down to that 97, 50, 98 zone overall over the time. And I'd be looking for something like this to occur moving forward. So I think the next 24 hours could show us a lot about some significant moves occurring on these markets. Let's move over to gold. What's going on there? Well, gold just continuously looks like it's kind of flagging on the way down. Again, I think weakness is starting to play out here on gold. It's only early days, but notice this box above. If we have a look at the daily, we zoom it in, this has been a huge critical level. Where do we find ourselves ahead of the inflation number? We find ourselves at supply. So another huge 24 hours. If gold does weaken, expect it down to this alert down here, price-wise, for anyone listening with their headphones, around 1670-ish. And this is a rejection on that daily for now. So gold, technically at the resistance, at supply, it's at a point where you could see it start to weaken after what's been an incredible move. That doesn't change my longer term opinions of gold, but depending on inflation numbers, we'll find out what the market really wants to do. What a great pattern though here. A huge range, a potential triple bottom or double bottom with that ideal movement towards the upside, possibly starting something really big. And as we mentioned on the GDX, which is the stock index, you can see here some strong movements, hitting that resistance, finding a little bit. And I wouldn't be surprised at all if gold does this for a little while and then potentially explodes. So we'll continue to watch that as closely as possible. Another bad session on oil. Didn't come up for the nice short, which would have been here, but it did weaken and continue to weaken. It's much in line with what we've been discussing recently, but it's at strong demand ahead of this inflation number. Again, serious levels being reached. This was the previous purchase, a huge supply before that. I know there's trades, and there's a huge amount of trades that have gone in over there. You can just see it on the charts. You can tell when you use certain indicators. It's a big deal, and this level is critical. If it does bounce from here, we'll have to talk about in the next session. Predicting oil off this level, all you could say is it's come down like a truck. Potentially it's looking for turns, but we haven't seen necessarily the signs on the higher timeframes. On the lower timeframes, we're starting to look a little bit better. Possibly we move through maybe a level like 83, 40. Possibly we're starting to see some real strength here from oil coming off the bottom. News will absolutely move this. XLE's been similar as well. You can see it made that high, broke to a new high, probably trapping a whole bunch of longs into the position. Everyone's bullish energy at the moment, like everyone. And it's had a great run. If you were in it early, you saw the island reversal. Well done to you. Good work. That's pretty nice. And it's had a great run. Take profits were probably going to be here, but we find ourselves at a critical point. The demand again. We've got highs, we've got lows, we've got higher highs. What if we see lower lows? You know, is this a change of trend for oil on the stocks as well? We know the barrel's going down, which we expect. Will the stocks start to actually lose some of their luster? Definitely consider it, and of course, start to look at these charts. What about the American consumer though? What about lead indicators? It doesn't look good. And this is led, of course, by Tesla and other consumer discretionary stocks, a new low versus staples. This is showing us that 1/3 of the US economy, because that is effectively consumerism, 2/3 is services, is sick. The market doesn't like it. The market's pushing it down. And that tells us that we're probably not finding a bottom at this moment in markets. Now, traditionally, you've seen kind of consumer discretionary pull us out, being one of the indications or one of the sectors that tends to do badly during bad times and tends to improve better. So this is not boding well for, unfortunately, dip buyers yet. Well, we'll find out what happens in the next couple of weeks, but not so good so far. Let's move over to Tesla. Well, 180 was happening. And I will say congratulations to anyone that was short into this level. I know a few of you were. A few people have sent me messages and stuff. Well done to you. Obviously, we kind of thought about this level and we thought it was possible. But what happens here is more interesting to me. So we're now closed at below 180. Now, I would have expected a better pickup off this level. That shows, again, a sickness in this stock at the moment. People are not willing to bid it correctly, at least from the algo-driven kind of zones. The next session will be interesting, though, because when we find out inflation, this is the zone that I would expect some pickups to happen. I mean, it's not just any zone, it's a big zone. If you look at that daily, we came down to the 180. We bounced off at December 2020, March 21, and May 21. All three times, this level held buyers. And you wouldn't think they'd be able to swipe this without seeing some pickup. So I think day traders will be all over Tesla in the next session trying to figure out the next level. If it continues to hold below, though, we've got to watch out because we've estimated that 136 or even 123 is quite possible, and somewhere in this range is a big deal for Tesla moving forward. You know, there's not much structure on the left-hand side. It has to find buyers. I think the inflation numbers going to do a lot to this stock, and we'll find out how it plays. Apple is saying very similar things. Apple fell off and it came down to test it. We know this is a juggernaut of the stock market. If it fails and starts to fall off and capitulate, the rest of the market will probably come with it. So this is, again, another one that we're watching incredibly heavily over the next 24 hours, depending on whether it can make new highs and double bottom off, or whether it does end up breaking down, could have significant impacts to the Dow, the S&P 500, and of course the NASDAQ. Let's have a look at the financials. A little bit of weakness there. Again, people are looking for this level here. They want to see a doubling bottom to prove that the economy is recovering. Well, could this all be a trap? We'll find out probably relatively soon in the next couple of days. Dow Jones still is smashing the S&P 500. Look at the ratio go. Again, old economy versus new economy. The old economy is kicking ass. The new economy, being tech stocks, is being sold off. It's more about valuation concerns, but is it also a rotation from Wall Street into the defensive sectors? That's something that we're seriously considering here at the moment. And it's not the type of thing, again, this rally hasn't presented the normal style of rally. It's presented a defensive rally, which is very strange. The Dow took the high. Of course, we got the higher high on the Dow. We now are looking for a lower low. That will probably solidify the old economy starting to weaken. And if that does occur, we again could be seeing some serious sell-offs. Remember, the Dow is not down much for the year. In fact, it's been a juggernaut, only down 11.88% from the peak. And that's not much when you compare it to what the NASDAQ is down. And if you'd said that to anyone at the start of the year, yeah, you know what, the NASDAQ's going to be about 10,800, the Dow's going to be down 11. People say, come on, are you kidding me? So you have to expect the unexpected. The NASDAQ's not showing us much on the 2-hour chart, unfortunately. It's pulled back. It's in the middle of nowhere land, in between kind of the resistances and the supports. But what it does show us is the current storyline. So the current storyline, it could be either accumulation still or distribution. This could be part of a wider schematic towards the upside, or it could actually show us that the market's about to capitulate. And that's why we have alerts down here. Similar to Bitcoin, if this market falls through these lows and closes below them, there's not much necessarily holding it up. Let's have a look at the weekly here, just to get a bit of an idea of how much trouble we could be in should this market come off. Remember, it's been potentially distributing, selling positions into retail traders and other unsuspecting people. It's very possible. And this was our last hold level. Below that, we moved down into just above 9,000 territory. So this level sitting around 9,400, a fairly significant fall off. For some, a watershed style moment. Maybe they want more, I don't know. But certainly a very significant drop off. If the weekly closed like this, I wouldn't have very good feelings about the next week. So again, it shows you how important this inflation number is. We don't want to see this type of candle again, because it leads into bearish style candles the next week, and it can lead into further capitulation. So again, the week close, such an important one for the NASDAQ. I'm looking very closely at this market, although I'm not trading this one. I'm liking the S&P 500 at the moment, but I am looking closely. S&P 500 goes long leg doji into a short candle ahead of the news. It's actually pretty much exactly in line with what we suspected. With the high, the low, the higher high, the lower low, we pulled back and we were looking towards the shorts in the last 24 hours. We haven't seen any buyers come back in and show serious commitment, but I'll show you the two key levels that we are watching. The first one is going to be right where it is right now, which is around that 37.40. And then we've got the wicks that came off the non-farm payrolls, which sits around 3700 to 3720. This zone is pretty important. Now, if we end up making a new low and closing below this, watch out down below. Remember, there is still a 3582 or something like that gap sitting below. The most traded level is 3677 throughout all of this range, or it was the most traded level. And there's a lot of significant possibilities here over the next 24 hours. We get down, we don't find buyers here. If we don't, and we close below, you've got to think that continuous selling could occur and push us down to fill some of these gaps and get down here. That's going to push the NASDAQ to potentially a new low. If that happens, watch out. We've got to watch out. So the previous session was pretty good. The sell-off certainly did continue. this is a day where you clearly cannot necessarily fully predict the market. Sometimes you have statistical advantage. Many days over the last 2 weeks, we have had incredible statistical advantage and they've been great positions. If the market finds initial rallies, I think sellers could be floating around that 38.25. Sometimes what will happen is it'll rally and then it will sell off a zone like that. That's certainly a possibility. I'd be playing a lot of different styles or just sticking out of this one if you weren't clear. Still looks short more than long. This market is mostly looking sick coming into the inflation number. But of course, like a snap of fingers, it can change. Let's take a look at options. Does that help us know anything? Not really. We've got a 364 puts and we've still got 350 puts. Let's have a look at the big one though, because the options expiration on the 18th of November, that's the key number. And it still has puts all over it. We've got 4.87 million units. They're everywhere here. Even if we do see capitulation fear, you'd have to think there was buyers to be found to try to keep it at least above that kind of 350, 360 level on the market, because they don't want to pay this money out. I mean, why would they want to do such a thing? Let's have a look at the FTT in terms of what's going on with the crypto market. This thing is really bad. In fact, it's even gotten worse since I had a look at it this morning. For me here in Australia, it's falling off. I mean, it looks bad. This is not, by the way, I repeat, this is not the type of thing that you want to go in and think, oh, that's a great idea to buy this type of falling knife. This is pure fear, and this isn't necessarily savable. We saw, of course, Binance have fallen out of love with it, and they've said, nope, we're not going to do that for now. That sent Bitcoin spiraling, and Bitcoin's continued to go weak, which we totally suspected it would. And it makes perfect sense that it could continue to find rallies that are met by sell demand. Bitcoin is in the crypto winter. This is not good media for it. Where there is one, there is generally more. And that's the problem. People know this type of thing. So we've long suspected that crypto could go between negative 83 and 86% down, which takes us into that 11,500 to 9,500 range. That's still an area that I believe is very possible. We've also suspected that the crypto, if it's going to follow similar ones, should technically bottom before February of 23. Will that happen again? I mean, these are just the statistics behind it. There's not much to like about this market right now. I guess if you're a thrill seeker, you can go and have a look at the small time frames. But even looking at this 2 hours, it's mostly been closing on the lows. And with another day, look at this day close, with another day closed, this time no wick purchasing, it just shows you that rallies most likely are met by sells. Be very careful in the crypto market right now. It's unstable. And as the news comes out, as the events change, expect potentially 10 to even 20% swings in the click of a finger. That's how fast this will be. News ahead, it's all about inflation, guys. Do not forget inflation. It's a big deal. Core CPI inflation coming out, expected to be 0.5. They've revised inflation down to 7.9. It was 8%. So they're actually revising year on year down, thinking maybe it's getting better. This news event will no doubt move the markets considerably. There will be a liquid. And what that means is that they will if you are in a scalping style position, they will jump your position. So be very, very careful of that. Has anyone ever been hit by, unfortunately, a liquid events where they've gotten jumped and hit on a different price? Let us know in the comments down below, because that's the type of thing that nightmares are made up of if you don't know what's happening. And for new people out there, you have to be aware this type of thing is serious. Also, come and follow us over on Twitter and, of course, Discord if you're interested. And a big shout out, of course, to Tiger Brokers, the sponsor of today's video. If you're interested in finding out more about the 1 free month for Australian, New Zealand clients, I'll see if I can extend that to everybody. Then check out the description down below, click the link, sign up with them, and of course, gain access to that. Thanks so much, everyone. Subscribe, smash the like button. We'll see you in the next one. And good luck during this massive inflation read that we're about to see. It's going to be fireworks.